First-time homebuyers are getting royally screwed, and it's primarily due to housing affordability, rising interest rates, rising house prices, and while rates and house prices have both pulled back, they haven't pulled back in a meaningful way to really increase affordability. And this is keeping the gap between the haves and the have-nots at record highs. First-time homebuyers are continuing to struggle in today's market. In fact, back in December, they made up only 31% of the sales compared to the historic norm of 40%. On top of that, we got most Gen Zers thinking that a mortgage is out of reach, in addition to fewer adults planning on purchasing a home this year. So what needs to happen to increase housing affordability? What needs to happen for home buyers not to be screwed? For first-time home buyers to be able to make up a larger percentage of the home buyers and to be able to close that gap a little bit? Well, there's three things that actually make up housing affordability. The first is wages. The second is interest rates, and the third is house prices. And in today's video, we're gonna go through all three of these things. On top of that, we're gonna go through the household composition of buyers. We're gonna look at the median age of buyers, along with race and ethnicity of buyers, to show you exactly what's happening with the first-time home buyer demographic and when it's likely to improve. Now, before we dive into that, I wanna take a minute and ask a favor. If you find any value in my videos at all, do me a favor and hit that thumbs up, along with subscribing to the channel. By doing that, it helps the YouTube algorithm push it out to more people and helps me accomplish my goal of helping educate, empower, and guide first-time home buyers through the real estate process. Back in the second quarter of 2022, California housing affordability slid to the lowest level that we've seen in nearly 15 years, where only 16% of Californians could afford the median home price in the state, which is basically at an all-time low. Well, the answer for a lot of people is that we need rising interest rates and we need house prices to pull back. And while we have seen interest rates go up considerably in 2022, we've actually seen them pull back as inflation has pulled back. And as inflation continues to go down and moderate, we should see interest rates follow. Now, there's a really good chance that we're not going to see interest rates back in the low 3% range, but there's a really good chance that we see interest rates pull off the current levels of where we're sitting today, around 6%, and stabilize somewhere in the 5% range. And with that stabilization, it's likely going to provide a floor for many markets out there when it comes to house prices. So the idea of house prices dropping considerably to help increase affordability isn't likely to happen anytime soon. And with the drop in interest rates that we've seen, we've actually seen mortgage demand increase significantly from that point. So there's been a lot of buyers sitting on the sidelines waiting to purchase homes. And as interest rates went up, their purchasing ability went down and they decided to wait for one reason or another. Maybe they couldn't qualify for the home anymore because of where rates went, or maybe they just decided to sit back and said, this is crazy, I'm not doing anything until something changes. In fact, if you look at this chart here, you can see as interest rates went up, less and less people can afford these properties. But as interest rates pull back, which we're likely to see, that creates more demand in the market, but it also creates more competition. And I know a lot of people out there are saying new construction is the answer. Well, yes and no. At the moment, there's about 6 months of inventory that will be coming to the market in 2023. Builders are out there working on properties, and these properties are likely to be done sometime in 2023. But as you can see from this chart here, a small majority of those homes are actually in the lower price points. In fact, only about 11 of new homes sold were under $300,000 in December of 2022. This is down from about 80% in 2002. So in 20 years, we went from 80% of the homes being built under 300,000 to today, where only 11% of those homes are under 300,000. And that's why the 300,000 bracket is going away. Inflation has pushed prices higher. And even as inflation moderates, you're not going to see home prices come down significantly. There's a difference in inflation and high prices. Inflation is the rate of increases over a given period of time. But even as inflation moderates, the prices don't typically come back, especially when it comes to things like housing. And another factor that's making it very difficult for first-time home buyers out there is the number of cash transactions. Whether you're competing with a buyer that's buying their first home and coming in with cash, or a move-up buyer, they sold a home, they took the cash, they're buying something else, or an institution, either way, it's putting pressure on first-time home buyers because it makes it very, very difficult. That's up 5% from the 23% that we saw in December of 2021, with investors making up nearly 16% of those purchases. So even as house prices pull back, interest rates pull back a little bit, you're ready to get into the market, you find a house that you want, there's a really good chance that you're going to be competing out there against another buyer. And in some cases, you're going to be competing against a buyer that has cash, which makes it very, very difficult to really compete in those markets. And that's really why we're seeing the household composition change so much from 2022 back from where we were in 1981. As you can see from this chart here, back in 1981, 68% of people buying homes were married couples. So that means they had two incomes. At that time, house prices were less as well, but they were able to use two incomes to help buy a house. And that definitely plays a factor in housing affordability. When you have two incomes going in, it makes things a little bit more affordable. And back in 1981, we had 12% single female, 13% single male, and 7% were buying in another way. Whereas compared to 2022, only 49% of the people buying were married couples. 18% were single males, 19% single female. So we have more people purchasing individually, which typically makes housing less affordable because you only have one income being able to purchase that home. In addition to the median age of the first-time home buyer increasing significantly. By looking at this chart here, you can see how the age of the first-time home buyer continues to go up. And that's partly due to the prices of homes, has a lot to do with the generational changes, people staying at home longer. Back when I graduated high school 24 years ago, the idea was that you moved out of the house at that time, you went to college, and you didn't really come back. Well, things have changed in that last 20 years. Now, I'm not aging myself here, I hope, but a lot of people today, they stay in the homes longer. They may stay in the home and go to college, or they may go to college and come back and live at home and save money. And that's because of a number of reasons, but we are seeing more people live at home to save money to be able to afford housing. People are getting married later in life, they're having kids later in life, so the need to buy a property in your early to mid 20s isn't there for most people, and that's why you've seen that age increase. And as housing affordability remains a problem, that age is likely to continue increasing because people need better paying jobs. They need more time to save money. And this is another reason that first-time home buyers are finding it very, very difficult to compete in today's housing market. But the people that are getting really screwed when it comes to buying a house are the minorities. As you can see from this chart here, nearly 88% of the buyers in 2022 were Caucasian compared to African American, Hispanic, and the Asian demographic. And again, that goes back to housing affordability. So what actually makes up housing affordability? Well, it really comes down to a simple equation. It's the percentage of families that can afford the median price home at current interest rates. There's always demand for housing. Now, if you've heard me talk in the past, there's willing demand and there's able demand. There's always a plethora of people willing to buy a house. In fact, given their choice, 2/3 of Americans would choose to own a home. So people want to buy property. My phone rings every day from people looking to own homes. But the reality is not everyone can do that. And that's what brings up able demand. There's the willing, the people that want to, and then there's the able, the people that can actually afford to do it. And when most people are talking about affordability, they're not talking about the official measure of affordability. They're really talking about themselves, their ability to afford a home in their market. So what will actually increase that affordability? And the first thing is wages. Now, wages typically go up over time. Every year, in fact, the average hourly income increased about 4.6% in 2022. And this isn't the historical norm. Normally you see about 2 to 3% on average per year in wage appreciation. So over time, you're going to make more money. So as somebody out there looking to buy a home, it's important to continue to try to grow in your job, move up the ladder, if you will. And you can do that by providing more value, going and getting additional education, getting a side gig, getting a job that pays more money. But ultimately, you want to try to increase your wages, which will help increase housing affordability. The second factor that makes up housing affordability is interest rates. Now, you can't control interest rates, but you can control some of the factors that go in to the interest rate that you receive. Now, prior to 2022, interest rates were in a 40-year downtrend. And in 2022, we broke that downtrend and interest rates increased. But I do believe there's a really good possibility that you see interest rates pull back. Now, as I mentioned earlier in the video, I don't think you're going to see interest rates around 3% again anytime soon. But I do think there's a really good chance that you see interest rates pull back and stabilize a little bit and continue to trade in that range for an extended period of time, which means I don't think you're going to see any huge increases, but I don't think you're going to see any huge decreases in rates either. But as a potential buyer out there, you should be focusing on things that affect your credit score. If you can pay off debt, if you can improve your credit score in any way, this will help you obtain a better interest rate and better terms on your mortgage. And better terms lead to a lower monthly payment, which in turn helps you with affordability. So by focusing on your wages, focusing on your credit score, which affects your interest rate, you can help yourself increase your affordability. And the last factor that plays into housing affordability is home prices. Now, we have seen home prices move off the peaks that we saw in 2022, but for many markets out there, we haven't seen a drastic reduction in prices. We haven't seen housing prices crash. And with that said, I don't think you're going to see one in the future. In fact, as interest rates pull back, I think you're going to see the housing market stabilize. But I do believe over the next 3 to 5 years, you're not going to see any huge appreciation in house prices. House prices are likely to move sideways for an extended period of time. Over the last 60 years, home prices have increased about 4.6% on average. And when you have 2 years of 30 to 40% appreciation, you get well above that trend line. While home prices moving sideways for 4 to 5 years will allow us to get closer back to the norm. And while wages increase and interest rates moderate, that's likely to help out with housing affordability. Now, if you're a first-time home buyer watching this, waiting to buy until you can increase your affordability, and you're not really sure where to start in the process, I've created a first-time home buyer course to guide you through that process, to educate, empower you, and really be your guide so that you can become an expert when you're ready. And if you're interested, there's a link in the description below. Now, I do believe housing affordability is a real issue. I don't think there's a short-term solution to the problem. A lot of things have to happen in order to make housing more affordable. And unfortunately, I don't think you're going to see all of these factors happen at once, and they're not going to happen quickly, which means it's likely to remain difficult for many home buyers out there. But when you do decide to pull the trigger and purchase a home, just make sure you're purchasing for the right reasons. It's the right time in your life. You have money in the bank, you're comfortable with the payment, and more importantly, you have a longer term time horizon.